Unprofitable traders get stuck in a mindset loop. And I know exactly why. Because they neglect journaling and they never improve on the skill set they actually have. In this video, I'll show you exactly why I log and why logging your trades actually will increase your mindset and makes you consistent. In the previous episodes, we built a full trading framework. You have structure, you have entries, you have risk, you have targets, you got filters, you got TPs, you got everything. Now comes the part that most traders skip. And that's journaling. Because without tracking your trades, you are just guessing again. And you cannot increase the profitability. Why is journaling your trades so important? A trading journal does one thing. It shows you the truth. Not what you think happened, but what actually happened. Without a journal, you repeat some mistakes you do not want to repeat. And it helps you immediately to maintain focus. Because I'm 100% sure, if you already traded live, that you can remember your not positive trade, your last not positive trade. But do you also remember your positive trades? This is why a journal is so important. So you can look back how good and how precise your trading is actually. What do I find so important in journaling and what do I log? I take a screenshot when I enter a trade. I take a screenshot when I exit a trade. I put in how much R I collected. I put in the time when the trade occurred. And then I follow a structure. But most important part is not the number, it's the process. If you're new in trading, this is the most important question you should ask immediately after every trade. Did I follow my plan? Is that a yes or a no? If it's a no and you made a gaining or you made a profitable trade, that is a not profitable trade for your mindset. If it's a yes, congratulate yourself and pat you on the back, even if it's a not profitable trade, because that trading plan will help you succeed and get to your outcome. Second one that you definitely also need to ask yourself is, how good were your emotions? Were you calm? Did you feel rushed? Did you feel confident? Did you feel scared? Did you want to take profit too soon? Write it down. This shows a pattern over time. And because trading is not only technical, but very psychological and very mindset directed. This is a repeated process that you will see happening over and over again, and it's for everybody a little bit different. But if you can manage to see your repeated process go over and over again, you can stop it. Because if, say that I closed my trade too soon multiple times, and you have this in your monthly 6 times, where you can actually see if you let the trade go and did not take profit that soon, that you would have made it a huge amount of R collected more. If you see that pattern go back every month in a row and a row and a row constantly, this is how you can improve your mindset. Because you now can see clear that it's not the strategy that's the problem, it's the emotional trigger that wanted to take profit that was the problem. If you stop doing it, you can see that you could be profitable sooner. So journaling is one of the most important lessons in trading because it reminds you, first of all, that you have profitable trades, but second of all, it can show you such a small mistake that you made that you don't even see it when you're doing it. But if you journal it, you can see it directly. And this is what makes it so important. After the trade, I still take a screenshot after a profitable trade, yes or no. I write a short sentence. I'll show you in a minute how I write it. I log my results and I move on. I take a few minutes, but it changes everything over time. And that journaling actually takes 6 minutes maximum. So if you are wanting to be a professional trader or you want to have a full-time income out of it, you will have to learn to do this. It's a boring thing, but that boring thing makes you a lot faster profitable. Any business has to be able to track everything, because if you can track something, you can improve on it. If you do not track your mistakes or your not good habits, how can you improve on them? That's the same if you are overeating and you know you're doing it, but you never stand on the scale before to measure your weight. And a month later you said, yeah, I'm probably the same, but actually you gained a pound or gained a kilo. How can you actually know it if you do not see it for yourself? So by measuring, you can actually improve on every skill so much faster. Why it works is when you track your trades, you start to see patterns. You don't switch setups. When you make a mistake, when you break rules, that is the importance what happens. So in short, everything that you track will show you different stuff. You will see not good patterns, like I said, emotional patterns. You will be able to recognize. You will also recognize taking profits too soon or letting your stop not do its thing. You will see that your setup works, but that you just have to repeat it over and over again. You will be able to see if you broke your rules, yes or no. And if this happens constantly, why does it happen? Write it down. Because if you can send me that journal, I can actually directly point out what is not correctly in your trading right now. The common mistake I see traders make too many times is they only remember big wins, or not big, or big losses. And I believe most of you don't even remember all your big wins. The most that you remember is the last trade that did not go correctly. But consistency comes from small, repeated actions. The journal keeps everything objective. And this is very important in trading. You cannot let your mindset determine if you should take a trade, yes or no. You should always let your plan determine if you can take that trade, yes or no. And this is why trading is so easy and so not easy, because people want to make a lot of money in trading, but they will not do the stuff that you actually need to be doing on your trade. So if you can do this and you can repeatedly journal over and over and over and over again, you'll be very profitable. The mindset behind everything is professional traders or real traders that make money don't rely on memory, they rely on data. Your journal becomes your feedback system. So it's the same if you're selling a product on a web shop and you want to track where your customer comes from. You need to have that data backing that up. You cannot say, okay, that one came from Facebook, the other one maybe from Instagram, but I'm just guessing. That won't work in your business. This is a business, people. If you want to treat trading as a business, treat it as a business. So journal your trades so that you know exactly when to get in and where to get out, and what you did correctly and what you did not correctly. This will make you so much more profitable, but do it. Look, I still needed to journal the one trade from today, and I'll show you exactly how I do it. So we were the 18th March. I took a short, and I actually did not take a screenshot yet from the start. So I'll go over it. So this is important for me, what stands in it, why I took that trade, and how I entered it. For me, everything's already on the screen. So first of all, what do I have to do is put a screenshot in my trade. Now, did I take a long or a short? That needs to be into it, and then the time when we entered the trade. I entered this trade at 10:15, and we took full profit at 1 o'clock. Then you put in your R collected, and we take a look what we actually did. So we made a BOS to the upside. There was a shift in the structure. So the changing character, that means we had a 5-minute FVG created out of that. I put it a limit order in that FVG and targeted to the 0.78 retracement. Good, clean trade. Took a partial at the 0.5. So with this, I know exactly what it needs to be inside my trade. And then the R that we collected was a 4.3, was a half hour trade only, and I collected a 2R out of this trade. You can see I journal all my trades. This is from July 25th until now, and March 26th. And this is the journal, trade, log, everything, so that you know how well you have been doing every month. If you're still not clear how to do this and you want to improve your trading a lot faster, you can join, first of all, a one-on-one mentorship that I give, and then you learn exactly what I do every day with the full group, and I'll show you exactly how I see the market every day. I've been in this game so long and seen so many charts. I've seen so many gurus pass by, and that's not me. I'm not going to convince you or hype anything up to say that you have to go to my courses. I don't want that. If you are ready to get a real structured guidance and have patience, calm, and are willing to learn a disciplined skill, then you're on the right mindset. And then you're in the right area. I do it calm, steady, and repeatable. I'll be doing it for years, and I will be doing it for many more years. There is a link in the description where you can join. Remember, trading is not about just taking trades. It is about improving your skill over time. And that only happens when you can track what you do. So start journaling. In the next episode, I'll show you how I review my week and find patterns that actually improve my trading skill.